good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look again at financial results which are being released, and today we're focusing on WCO as well as Answer Merchant Bank Limited. Now, both companies or both groups would have reported slightly lower earnings for the fiscal year ended 2020. Let's take a look at why that would have happened and what investors might be able to expect in the months ahead. So turning first to WCO, well, the group would have reported an earnings per share figure of $1.62 per share, which is a very marginal decline of 1.8% from the $1.65 recorded in the prior comparable period of 2019. Now, revenues were down just about 3.8% from $935 million to just around $900 odd million. Gross profits were down also around 5.4% from $728 to $688 million. Profit before taxes down just that 3.2% from $607 to $588 million, and overall profits attributable to shareholders decreased that marginal 2% from $418 to $410 million. So all in all, not a bad year given what would have occurred or taken place in terms of distribution and closure of sales channels for WCO in fiscal 2020. Now, one of the good factors of WCO is for fiscal 20 was in fact that it maintained a lot of its profitability and operating efficiency throughout a very broken up period that was affected by the pandemic in 2020. And as we take a look, gross profit margins would have declined moderately, or very modestly rather, from 77.9% to 76.6%. But otherwise, the operating profit margin and profit after tax margin actually increased, meaning that the company was able to turn every dollar, or on an incremental basis, every dollar of revenue generated into more profits for shareholders. So we can see that profit after tax margin in that lime green color would have improved steadily from fiscal 2018, from that 44% to 44.7% in fiscal 2019, and in fiscal 2020, that 45.6%. So certainly WCO doing a lot of things right in terms of getting their operating efficiency up, and that could only be a good thing for investors in the years ahead. Now, when we take a look at WCO's primary attraction for investors, we can see that they have been able to maintain it, and we're talking, of course, about their dividends and that dividend payout. WCO has maintained a very high level of dividends being paid out relative to the earnings generated, in excess of 95%, and we can see that has moderated just a little bit in fiscal 2020 to 95.1%. However, very healthy dividends, again, notwithstanding what would have taken place in terms of the pandemic in fiscal 2020. In that purple column, WCO has been able to maintain a fairly robust dividend over the past couple of years, and most impressively in fiscal 2020 with $1.54 per share relative to the $1.57 per share paid out in the fiscal 2019, or related to fiscal 2019. So at a price of $32.78, WCO is trading at a price to earnings ratio of 20.2 times, which is moderately above the sector average of 18 times. However, it does offer quite compelling dividend yield. Again, WCO's appeal has really been that dividend payout capability of 4.7% compared to the sector average of 1.5%. So on the basis of fair valuations, that very good operating efficiency, which seems to be improving incrementally over the past couple of periods, and its relatively strong product pricing power, notwithstanding the competition from substitute products as well as illicit trade products. Bourse is going to maintain a neutral rating on WCO for the time being. Turning quickly to Answer Merchant, and for the fiscal 2020 period, well, it was a fairly steep decline in earnings of 41.7%, with the group recording an earnings per share figure of $1.89 compared to the $3.24 in the prior comparable period. Operating income was down 18.3% from just over $1.1 billion to $900 million in total. There was a decline in operating expenses as well, from $448 to $425 million, declining just around 5%. Overall profit attributable to shareholders declined that 41.6% from $277.6 to $162 million. When we take a look at Answer Merchant's profit before taxes by segment, we see that there was some stark deterioration in over fiscal 2019 into fiscal 2020. Banking services would have declined just around 40% from $215 million in PBT to just around $130 million. Insurance services around 52% from $156 to $74 million. That's in that lime green color. And the mutual fund segment, traditionally a smaller segment, would have actually just about broken even falling from a profit before tax of 20 million to just around break even, as mentioned. Now, for investors, the important thing to note is that this would have really been the effect of certain accounting changes in the main related to IFRS 9, which would have led to some unrealized losses passing through the income statement, affecting their profitability. So again, this may be more of a paper loss effect, and as markets recover over time, we expect that this will be reversed and have a positive effect going forward, again, on a paper basis for Answer Merchant Bank. In the main, notwithstanding other several factors that would be positive drivers for the group, notably that they would have been making some certain acquisitions or are in the process of making certain acquisitions. As investors would be well aware, Bank of Baroda, that banking franchise was acquired by Answer Merchant Bank later in 2020, as well as the ongoing Trident insurance operations in Barbados that is also in the process of being acquired by Answer Merchant Bank. So at a price of $40, the group for Answer Merchant Bank, AMBL, is trading at a price-to-earnings ratio of 21.2 times, which is elevated relative to the sector average of 13.3 times, and offers a dividend yield of just around 1.9%, which is above the sector average, but by no means incredibly attractive on an absolute basis relative to other sectors, as well as general bond yields. So with those acquisitions in mind, which is a positive driver, but tempered by those elevated valuations and economic uncertainty to some extent, Bourse is going to maintain a neutral rating on Answer Merchant. And that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com, where you catch all our research absolutely free. And whatever you choose to do this coming Easter weekend, please do it safe, social distance, and of course, be considerate of the health of the overall nation in all of your activities. That's it for this week. Have yourselves a wonderful investing week. And this has been the Bourse Report.